Hey, what's going on, guys? My name is Richard Moglen and welcome to this week's stock market outlook video. As always, it's going to be interpretation, not prediction. No one actually knows what's going to happen with the stock market next week, but what we can do is analyze the current trend of the market and use that to determine whether we should be aggressive or defensive. So in this video, we're going to look at the big picture article from investors.com. We're going to look at the GMI signal from wishingwealthbottle.com, and then we'll actually take a look at the indexes for ourselves to determine their overall trend. And then to round off the video, we're going to look at my current holdings and how they performed this week. So first, starting with the big picture article from investors.com, we're given 5 big reasons why this market uptrend, which we've been in since mid-October of 2019, is still likely to continue. And the first reason that they give is that the big companies, the FANG stocks, Comcast, Intel, are all in overall uptrends. And because the NASDAQ is market cap weighted, this means that these big companies have a big influence over how the overall index performs. And since that these companies are doing well, that means the index is also likely to do well. The second reason is that earnings have been decent, and with 65% of S&P 500 companies reporting, we've got a 0.8% gain instead of an expected 0.4% drop, which is definitely a good thing. Also, Wall Street expects an 8.3% EPS growth for 2020. The third reason that this market uptrend is likely to continue is that the leaders are acting well. They mention Adobe, AYX, AMD, Vertex, TNDM. All these leaders in their fields are in uptrends and their breakouts are working. And this signifies a good health for the overall market. The fourth reason is that market internals are solid. And by this, they mean that there's a lot of new highs happening at this time. And last week, we had 211 new highs for the NASDAQ and 219 new highs for the New York Stock Exchange. The last reason that they talk about is that Wall Street actually isn't overly bullish. And this is a good thing. You want a healthy level of bullish and bearish sentiment. And right now, the bulls versus bears ratio is 52.9% versus 19.2%, which is a good level to be at. Now switching over to wishingwealthbottle.com, you can see that we still have a green GMI signal since October 16th, 2019. And the latest GMI score that Dr. Wish has posted is a 6 out of 6 on the GMI score, and on the GMI2, it's a 7 out of 8. So definitely still healthy levels, and you can also see the nice red, white, blue pattern that we are currently in. So first, taking a look at the QQQ, you can see that overall this week, we increased 2.37%, which is definitely a solid gain. And taking it day by day, you can see that we recovered nicely on this Monday, kind of from this short-term consolidation here. And apart from Tuesday, each day we closed higher than we opened, which I take as a positive sign. Looking at the daily guppy chart, you can see we're in a nice red, white, blue pattern. And taking a look at the SPY, you can see that even though it broke down, the red, white, blue pattern broke down here briefly, it's recovered nicely and regained an uptrend. Next, taking a look at the IWM, which is the Russell 2000 index, you can see its red, white, blue pattern is definitely weaker than both the SPYs and the QQQs. And overall, however, it's regained kind of the uptrend after kind of breaking down 2 weeks ago. However, for an easy dollar environment, I do want to see it regain the highs and continue on upwards with the QQQ and the SPY. The last ETF I want to take a look at is FFTY, which is the Innovator IBD 50 ETF. And you can see that this is also kind of consolidating a little bit. And I would like for this, along with the Russell, to continue upwards. And if that happens, I would take that as a positive sign and really get aggressive and looking for stocks to invest in. But overall, all the relevant indexes are above their 10-day, 30-day, and 50-day moving averages, which is definitely a good sign. I do want to briefly kind of look at my gray area PCF code, which kind of helps me determine which ETFs are experiencing weakness at a time. And you can see that When it's all grayed out like this, that means the SPY, the QQQ, the Dow Jones, and the Russell are all either experiencing short-term volatility and kind of going sideways, or are in downtrends. And that's kind of when I get really defensive. But you can see that since let's see, let's go to the QQQ. And you can see that since October of this year, we've been in a very good easy money environment. And until recently, when the IWM was experiencing trouble, we've just been going up on all the indexes. So I would like to see the Russell recover a little bit more and the FFTY. But other than that, from the indexes, they all look good and they're all in uptrends. So now that we've talked about the ETFs, let's go ahead and look at the stocks that I picked up this week. So first, starting with SPC, which is Virgin Galactic. This was a very speculative purchase because there wasn't really fundamentals backing this, but I really liked the price action, and it has increased almost 130% since the start of this year alone. And just looking at the volume bars, you can see that there's a ton of big up days and not that much selling going on whatsoever. And to me, I take this as a sign of accumulation. So I bought it on Monday after it broke through this 19.84 level, and you can see it's had 4 straight add-on days, which I think is fantastic. And I actually sold half in the morning on Friday, just to kind of lock down some profits. But overall, on the rest of my shares, I'm up about 40%, which is the best I've ever had in 1 week. So next, I own the QQQ since the start of this new uptrend. AMD, I also bought on this Monday after it really showed some good strength and approached kind of this breakout level here, the 52.79. And overall, it's been going up and drifting up a little bit, but hasn't done much for me after this first Monday. Next, we've got CDLX, which also broke through on Monday, well, actually Thursday of last week, and that's why I bought it. But it kind of waited until Friday to move up. But it was up 5.4% on this Friday, which is great. And I really like the action on this day because you can see it dropped down below the breakout level and then recovered all the way up almost to the open of that day. Next, we've got PCTY, which I bought on Thursday of last week as it broke through the 45.2 level. And so far, it hasn't done too much, but it's a solid stock with good fundamentals. And we'll actually take a look at all these stocks' fundamentals in just a second in MarketSmith. So next, we've got TQQQ, which I bought a little bit later than the QQQ on this nice up day on 210. Next, we've got PLMR, which again broke through on Monday, and since then is just kind of resting. And I would like to see more volume coming in and it to actually move up, kind of like CDLX on increased volume. And finally, we've got ACMR, which I was actually stopped out at on this day, I believe, but I thought I'd bite at it again. And you can see it's kind of going and tightening up between these two trend lines. And I'd like to see it increase on significant volume. So after looking at the charts in TC2000, let's go ahead and take a look at each of these stocks in MarketSmith, and I'll kind of show you my process and how I use MarketSmith to analyze stocks. So first, looking at SPCE, I always at first look at this right-hand side here, and I want to see it tightening up and decreasing in volatility. Next, I kind of swing down here and take a look at the earnings, sales, and after-tax margins. And you can see that really the only fundamental that SPC has going for it is this big sales increases. But sometimes that's all it takes. And definitely because this is a new type of company, it has that going for it. But overall, it doesn't really have good ratings. Its EPS rating is a 9, which is terrible. Accumulation distribution rating, however, is A+. So that is significant, and that means that funds are acquiring shares, which definitely has contributed to this big increase last week. So next, let's take a look at AMD, which I believe is definitely one of the top stocks on my fundamental sheet, which will be in the description below. But overall, you can see it almost broke out on the day that I bought it, and since then has had some nice add-on days. But what I really liked was these fundamentals this past quarter. Earnings are up 300%, sales is up 50%, and after-tax margin is up 18%. These are the type of numbers that I look for, and these are the type of numbers that contribute to a true market leader. Overall, it's got an EPS rating of 73, group RS rating of A+, which is great, SMR rating A, accumulation distribution rating A, composite rating 99. This is about as good as you get for fundamentals. And I especially like that the overall group is doing well, because often the best stocks are in the best groups. Next, taking a look at CDLX, you can see that it was tightening up on this right-hand side, just how I like it. Its earnings were up 120%, sales up 63%, and after-tax margin up not that much at 1.4%. But you can see its EPS rating is only a 61, which isn't great. But like with AMD, its group RS is fantastic. Its accumulation distribution is also an A, and you can see a good composite rating at 94. So overall, it's been doing fantastic since this latest earnings report, and gapped up then and just gapped up recently. And I've been waiting for it to break out from this tight consolidation here, and I'm glad that I bought that breakout. So next, we're going to look at PCTY, which I bought on this Thursday right here. And you can see that its earnings were up 57%, sales up 23%, and after-tax margin up 15%. Overall, the EPS rating is fantastic, 99. Group RS is great. SMR rating is fantastic. Accumulation distribution rating isn't as good as I'd like, but the composite rating is also a 99. And what I really like about Marketsmith is everything is there in one spot for you to look at. You just kind of look around here and you can see the chart, you can see the earnings and sales, you can see the annual earnings. Everything you need is in one convenient place. And I also really like looking over here and looking for a breakout year. And what this means is that there's a significant increase of over $1 in terms of annual earnings. And you can see that this happened for PCTY in 2019. And that's a big reason why it was so successful in 2019. And you can see that its estimates are up for this year, up 31%. However, the estimates are down for 2021, slightly down 16%. And just to exemplify a breakout year, let's take a look at Tesla, which is an extreme example. It went from minus 1.33 1 year ago in 2018 to 0.02 in 2019 to $8.6 in expected in 2020. So that's fantastic, and that can really lead to a big price increase like we just saw. So getting back to it, let's take a look at PLMR. And you can see it was tightening up on the right hand side and breaking out slightly from this recent high. But its earnings are up 233%, sales are up 61%, after-tax margin is up 31.5%, so fantastic. The EPS rating is great, group RS is decent at B-, SMR rating is an A, accumulation distribution is a B, composite rating is perfect at 99, so overall very good fundamentals from PLMR, and you can see it had a breakout year in 2019, and that increase is expected to continue into 2020. So finally, let's look at ACMR, which was tightening up and still is tightening up on this right-hand side. And you can see I bought it on this big increase on Monday, 210, but its earnings are up 130%, sales up 44%, and after-tax margins also up 30%. So great numbers there, good numbers over here as well. So that is kind of how I use Marketsmith to quickly look through a bunch of stocks with good fundamentals. And that kind of is it for this video. Thanks so much for watching. Please remember to leave a like down below and a comment if you have any questions or concerns. And I'll see you guys in future videos.